You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries. As we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media, this is the show that connects the dots of confusion. Delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We're a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. But before we get into our intriguing content today, please join me in welcoming our featured guest.
Bad feeling about this.
Jim Norton, Realty Pro 100. Welcome.
Thank you, sir. Happy New Year.
Happy New Year. Glad to have you with us, I think. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls. I'm broadcasting.
Well, I do have a great team when it comes to developing a financing plan or a plan to save you money. I personally work with you even if you don't have any needs today. Save this number in your phone for future reference, 800-306-1990, 800-306-1990. 1990. And of course, we celebrate every day on Ron Siegel Radio. Sometimes I have to wonder about celebrations. So today is National World, or actually it's not national, it's World Braille Day. So it's not this is a biggie, it's World Braille Day. So the question I have, every once in a while I'll go to a drive-up ATM. And I'm just curious as to why do they have Braille on the drive-up ATM? Now, if you're in Southern California, you probably understand that there are some drivers that are probably think they're driving by Braille. Just throw that out there. Let's take a look. National Spaghetti Day. I like spaghetti. Okay, I'm more of a fettuccine, or not a fettuccine, the rigatoni, the smaller noodles. But you're a spaghetti guy?
Rigatoni? Really?
You know why?
Why?
Because I eat spaghetti and I end up getting it all over my shirt. Instead of getting
I do love a good rigatoni though.
Rigatoni, penne, any of those that are the
vodka penne pasta.
Why do we need the penne pasta? Let's just stick with the vodka.
No, you gotta have some. You gotta have, it's like hydrating along with your
vodka. Pasta and hydration all at one time.
Hydration, that helps the vodka get soaked.
I'm waiting to see what happens.
Don't use cheap vodka in your penne either.
Oh, what's his name? Emeril Lagasse.
I was gonna say Emeril has to be Emeril.
Emeril Lagasse. If you ever, I used to watch Emeril a lot with my middle son, and he would talk about the idea of cooking with wine. And he said, never, ever cook with a wine that you wouldn't drink by itself.
There you go.
Which that made sense because he says, the recipe called for 1 cup of wine. What are you going to do with the rest of it? Drink it, of course. And if you have a couple of bottles, you don't even care how it tastes. I did have a friend of mine, though, that Facebook friend, who is going through it. And have you watched these things on Facebook now? They're going through these cleanses. That's the January issue is a cleanse. So her comment was, what are you drinking for your cleanse? And I said, Tito's with Bellucci's olive. What else? I mean, what else would you be drinking?
You cleanse yourself.
Yeah, if you have enough Tito's.
Why do they have dry January too?
I don't know. Maybe it's because
you got Lent coming up. You're going to give up everything for 2 or 3 days then.
For 2 or 3 days then?
Okay. You always fail during Lent.
Something I don't even start it to. They don't have a Jewish version of Lent.
No, they don't have. We have dry January.
Jews. You know why the Jews don't drink very much?
Why?
You think about a male.
What Jew do you know?
A Jewish male on his 8th day of life gets totally drunk, and then they circumcise him.
Oh. That's right.
They stopped drinking for life. After that experience, I'd stopped drinking. I did stop drinking for a lot of years. Hey, let's take a look at the markets right now. The Dow Jones Industrial Average is up 235 points. The S&P 500 up 44. NASDAQ up 108. Oil down $3.56 a barrel. Hey, Joe, are you refilling the strategic petroleum reserves right now? Just throw that out there. But we're watching. Let's see the House of Representatives. They're in the news today. The obstructionists in the right side of the Republican Party, they haven't figured out that that's why Joe Biden is president, is because these obstructionists want perfect instead of good. So we'll see what happens there. Disney, Intel, Boeing in the lead as the Dow Industrials run intraday gain. Wow, Disney's up for a change. Okay, that's good to see. I got a new segment that we're going to be starting for you, and we're going to check it out with you today. We're going to talk about this one, Mortgage 101. So we're going to be giving you a lot of information about mortgages. I know you don't want to hear everything about mortgages all the time, but Mortgage 101 today, great news. You may have heard this before because it was a rumor, but as of the 1st of January, the loan limits every year, the Federal Housing Finance Agency, FHFA, updates the dollar limit on what it considers to be conforming loans. That's right. Conforming loan limits have increased from $647,200 in 2022 to $726,200 in 2023. And in areas like Orange County, LA County, Alaska, Hawaii, $1,089,300 for a single unit property. Goes even higher if you've got multi-unit. This means that your buying power is increasing. I'm going to share why this increase could have a huge impact on your refinance or purchase. To begin, let's discuss why this change matters. At the industry level, lenders are limited by how much they can lend to borrowers if they want their loans to conform to standards set forth by the FHFA. Conventional loans that meet these standards are called conforming loans. Conforming loans are great because they typically come with lower interest rates than other non-conforming loan types. This is a significant boost from the current limit of $647,200, and this increase in loan limits will dramatically increase what borrowers can qualify for throughout the country. This will specifically benefit many borrowers who will be able to apply for conforming mortgages instead of jumbo mortgage loans. You see, jumbo loans are typically harder to qualify for and carry higher interest rates because they're not backed by Fannie Mae and Freddie Mac and require stringent underwriting criteria. There are different loan limits across the country depending upon where you live. Home prices vary quite a bit from one state to the next, or here in Southern California, from one county to the next, and can even vary from county to county. This makes having one single conforming loan limit for the entire country difficult. After all, it's hard to compare home prices in rural Iowa to home prices in Orange County, California, one of the most expensive real estate markets in the country. This is why the FHFA has a higher limit for areas it deems to be high cost, a designation based on an area's median home values compared to the baseline conforming loan limit. The exact conforming loan limit varies depending on the median home value in a given area, up to 150% of the baseline conforming loan limit. And you can check with us to find out how much your conforming loan limit is in any area where you hear my voice. If you've been waiting to buy or refinance, this could be great news. Thanks for checking this Mortgage Minute, Mortgage 101 out. Is there anything we can do for you? Please don't hesitate to contact us. We look forward to helping you and answering any questions. And if you have any friends, family, or coworkers looking to buy, sell, or borrow on real estate, can I count on you to introduce them to me? And I always wonder this question. I ponder this when I look at these loan limits, and I wonder, when you're looking at a $726,000 loan, does anybody care about the 200? Right? I mean, it just makes it more difficult for people like me to remember, right? 726,200 or $1,089,300. Why can't we just round these numbers off when they get that big? I guess it's just to tax us to see if we really know what we're talking about. But, that's just the way it is. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, Jim Norton and I will be chatting. We're going to talk about where the markets are heading in 2023, the rental trap, how to handle a medical debt collector, and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, shame on you. The replay is available. Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
79% of all credit reports have errors that should be corrected through factual disputing. You could be saving thousands every year if your report was accurate. CreditSanitizer.com provides a free credit report audit when you furnish a specific $1 credit report. You can use this information to request corrections to your report and potentially save thousands of dollars. Get your free credit audit at CreditSanitizer.com. That's CreditSanitizer.com for a free credit report audit. CreditSanitizer.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. Give me a call at 800-306-1990. S&P 500 now up 42.41. That's going to change dramatically if you're listening to us as we record live in the morning. With about an hour and 45 minutes from now, there's big news coming out. And that'll affect the market dramatically. We'll talk about that in just a second. But let's take a look. The 10-year Treasury down 8 basis points, 3.716. Mortgage-backed securities are up just a little bit. That tells us that mortgage rates are down a little bit. But let's see what happened yesterday. And OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. Conforming loans up just a tad at 6.527. That was a 30-year yesterday. Jumbos at 6.453, down a little bit. FHA was down a little bit at 6.379. USDA, the rural areas, generally no down payment. Think about that, San Bernardino, Riverside. 6.447 was up just a little bit in the best loan on the market for those that earned it. The 30-year VA loan was down a little bit at 6.212. Does not tell us about any points paid or received to get these prices. This is just the actual raw lock averaged out yesterday. But the real question becomes, why is the market doing what the market is doing? Well, as I shared with you just a couple seconds ago, 11 o'clock California time, the Federal Reserve releases its minutes from the December 14th Fed meeting. This was the meeting that the Fed slowed their rate of Fed funds rate hikes from 75 basis points to 50 basis points. That was good for mortgage-backed securities. During his press conference, Chairman Jerome Powell alluded to going slower from here, signaling maybe 25 basis points on February 1st. We're going to look and see if the Fed acknowledged inflation coming down in the minutes and what their thought process is, if there is a thought process coming out of the Federal Reserve. That's a big question.
Such an idiot.
Oh, yeah.
Such an idiot.
Don't say that about the Fed chairman, but sometimes the shoe fits. Oftentimes, the days that the Fed minutes are released have a negative bias on mortgage bonds. So we're going to be watching that very closely. Mortgage applications. Here's the misleading news of the day. Let me give it to you so that you have heard it here, and I will tell you why it's misleading news. So we're going to hear that mortgage bonds, that mortgage application data for the previous 2 weeks was down. Well, of course it was. Don't you think people had something better to do than get a mortgage during the last 2 weeks of the year? Unbelievable how, and the Mortgage Bankers Association, they don't do a real good job of, adjusting for seasonality. So purchases down 12%.
Surprise, surprise.
Refinances down 16%.
Surprise, surprise.
It just, it doesn't make sense why these people report some of these things. and don't give us context. They're doing it over the second week of December, which was when rates are starting to come down from their peak, which was back, I think, around the 14th of November, give or take a little bit, which I can find it on my handy-dandy chart right here. About November 4th was about the peak of the interest rates at 7.144. So rates have been coming down. Why wouldn't people start? Remember, RSR two-step. I've told you about that before. It's just a great way to get your house, your financial house in order. RSR two-step. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that home loan, Geneva's got the programs and the products. Got to make the call, though, 800-306-1990, 800-306-1990. Jim Norton is in the house. Welcome.
Happy New Year. Everybody's happy. Everything's going great.
All going good, huh? We even got a...
I just love it when they release any statistics over Christmas.
Isn't that amazing?
It just amazes me, that and then they act like it's a shift.
Right.
It's like
you got to wonder about some of these things. And I don't know why
of course,
I had an applause meter for you, but even my soundboard doesn't even want to give you an applause.
Want to give me
we'll have to figure out and see why the soundboard doesn't like Jim Norton. I wonder what the deal is with this one.
I didn't pay my fee.
Okay.
I didn't pay my soundboard fee.
Okay, so I don't know. Josh, you hear the soundboard? No soundboard from Josh either. Okay, so no sounds for Jim Norton today.
New iPad for you in 2023.
Do I what? Oh,
You get a new iPad.
new soundboard. Okay.
New soundboard in 2023. All right, we got some sound. There we go.
Okay, you get that one, Josh? Okay.
All right.
Now we got Jim Norton in the house. So I had something really good prepared for you.
The amount of listeners.
Okay.
Oh wait, he's on today. Okay, yeah.
Yeah, they're tuning out. Okay, so
but
what's going on in real estate? I mean, something. Let me throw this at you, Jim, because there's a lot of folks that talk all the time that there's nothing going on in real estate in the last couple weeks of the year. Yet, the office where I'm sitting today, broadcasting. They were really busy.
Yes.
Were you busy?
Up until my 2 days out from Christmas, I was busy, but it's just people had time so they could see properties.
A little pent up demand there,
right? No, but it wasn't. This particular year, there was not any demand for closings at the end of the year. At least personally, I didn't have a demand for closings at the end of the year. Everything was wrapped up in November. And we didn't have a pushover. I mean, I've spent when I worked for a public home builder, and we were scrambling at Christmas because we're trying to get the last closings in because
get those numbers in for the year-end numbers.
Yeah, year-end numbers, exactly, because that's what a public likes to see is they want those year-end numbers.
Yeah, it's kind of funny when you think about that.
But yeah, the escrow should have been they should have been going crazy here trying to get their docs and everything at the last minute. I can understand that.
So I made that comment, and I'm going to share this with you. Thankfully, we're not sponsored by Zillow or Redfin or any of those guys, but it ties in with what you said, Jim. So I had a conversation with a gentleman, probably, I don't know, the day before New Year's, I think it was, maybe a couple days before New Year's. And my comment was, wouldn't it make sense, and being that you worked for a public builder, when you're thinking about Zillow and Redfin and Open Door and iBuyer, which are all horrible places for you to sell your house to, because they give you way less money than, my opinion, you're going to get way less money than you're going to get on the open market.
Right.
So my thought is, if I were to go and look up on the public filings, what is the end of the fiscal year for, say, Open Door or iBuyer, any of those companies?
I don't know if they're on a calendar or a fiscal.
Right, but so here's the thought. Here's my question for you. So you look it up and you say, okay, let's just say hypothetically, and I don't know the right answer for this. Josh, maybe you can look that up for me and see if we can see what the fiscal year is when Zillow reports their earnings on Yahoo Finance. Why has it? So let's just say that they report on a calendar year. So December. So that would be March 31st, and then every 3 months, the June and whatnot, right? Every calendar quarter. Wouldn't it make sense to go in and make lowball offers right at the like the 30 days out or 25 days or 15 days out because they need to get some of these properties off their books?
I would think they're constantly doing that, but they don't tend to drop them. There's one in my neighborhood.
Josh says it's February. Okay, so thanks.
Yeah.
So
which is a strange time. I mean, when you really think about closing in February.
Well, I mean, most of the almost all retailers their fiscal year ends end of January.
End of January.
But here's the thing
that's different though. Your real estate doesn't close and move in the average person's mind is on the same level as a retail. Retail, of course, they want the Christmas rush.
Well, that gives them 2 quarters though of
complete lift.
If real estate's closing in February, then that gives them 2 quarters where they've got the real peak at the beginning of the year. So their numbers look good for the first couple quarters.
It's backwards to retail.
Yeah.
If you look at it that way, you got the spring sales.
Spring and summer is when they want to.
Exactly.
So, but here's my thought is they want to get these properties off their books for their fiscal year end. And, if they had a good year, they might be willing to take a little bit lower price to get it off their books.
You would think.
Now, does that happen with the builders?
The builders, you can see it right now in the builders. I mean, the builders' confidence level is down. Everything's down. But really, the best bargain right now on the market is what you can get from a builder. Because what they're doing is with the slowing, they're trying to keep their inventory level. You know what I'm saying?
Right.
Is they're trying to keep an even sales force. I mean, they're going to be up at let's say they were doing 200 a month, and now they've dropped to 150. They want to get it back up to make sure it doesn't drop below that or keep it level. So what they're doing is on existing, if they've got 4 or 5 left in a track. I'm getting emails where they're offering 4% commission to the brokers. We've had this conversation before. So brokers are more inclined to bring it, but they're also offering financing to the home buyer. It depends on which builder it is and what position they are, but some of them have their own financing companies and some of them are offering pretty good rates. So they're coming in at 5%. A
little below market on the rates
below
there
market
too.
On the rate, and they're offering some incentives so you can get some upgrades.
So they don't want to lower the price
with a new home.
They'd rather not lower the price, so they'll give more incentives to the
Exactly.
agents and to the buyers on both sides of it.
So if you're a home buyer right now, do not pass on the idea. You might 6 months ago when it was at the peak before the market started to soften, you would probably have not maybe looked at a new home because it's out of your price range. But now you might want to go back and reconsider because it might be the better buy.
Let's talk about new homes when we come back with Jim Norton. We're going to also chat about avoiding the rental trap in 2023 and how to handle medical debt collections or the collector. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Is your budget getting blown up with high prices of gas and increased costs for other household needs? This is Ron Siegel, host of the daily home and finance radio program. Did you know if you have a low interest rate mortgage along with auto debt, credit card debt, or student loans, your family could potentially save $500 or more per month by restructuring these debts? If you'd like a free Borrow Smart analysis with our team, let's book an appointment to see how we might be able to relieve some stress. Schedule your appointment at rsrbsa.com. That's rsrbsa.com for your free Borrow Smart analysis. rsrbsa.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. Avoid the rental trap in 2023. If you're a renter, you likely face an important decision every year. Renew your current lease, start a new one, or buy a home. This year is no different, but before you dive too deeply into your options, it helps to understand the true costs of renting moving forward. In the past year, both current renters and new renters have seen their rent go up based on information from Realtor.com. 3 out of 4 renters, 74.2% to be precise, who have moved in the past 12 months reported seeing their rent increase. The strain from recent rent hikes isn't exclusive to renters who have recently moved. Nearly 2/3 of renters, 63.2%, who have lived in their current rental between 12 and 24 months and likely renewed their lease, have also reported increases in their rent. And if you look back at the historical data, that shouldn't come as a surprise. That's because according to the census, rents have been rising fairly consistently since 1988. So if you're considering renting as an option in 2023, it's worth weighing whether this trend is likely to continue. The 2023 housing forecast from Realtor.com expects rents will keep climbing. That forecast projects rents will increase by 6.3% in the year ahead when compared to the blue bar. Oh, I don't have the graph in front of me. But it's clear that the 2023 projection doesn't call for an increase as dramatic as the ones renters have seen over the past couple of years, but it's still above the historical average for rent hikes between 2013 and 2019. That means if you're planning to rent again this year and you've not yet renewed your lease, you may pay more when you do so. So you want to avoid that rental trap. It's going to be a biggie. And the bottom line is your rent is 100% interest. So don't worry about interest because it's basically the same as 100% interest. Rising costs may make you consider what other alternatives you have. If you're looking for more stability, it could be time to prioritize home ownership. One of the many benefits of owning your own home is it provides a stable monthly cost that you can lock in for the duration of your loan. Jim Norton and I were just talking about that during the break. As Freddie Mac says, monthly rent payments may increase over time, but a fixed rate mortgage will ensure that you're paying the same amount or less each month. With a fixed rate mortgage, your interest rate is locked for the life of the loan, but you can always change the loan if you want to. Steady payments allow you to budget wisely and make plans for the future. If you're planning to make a move this year, locking in your monthly housing costs for the duration of your loan can be a major benefit. You'll avoid wondering if you'll need to adjust your budget to account for annual increases like you would if you left your housing payment up to your landlord in their renewal cycle. Homeowners also enjoy the added benefit of home equity, which has grown substantially. In fact, the latest homeowner equity insight report from CoreLogic shows the average homeowner gained $34,300 in equity over the last 12 months. National number about double that here in Southern California. As a renter, your rent payment covers the cost of your dwelling. When you pay your mortgage on a house, you grow your wealth through the forced savings of home equity. Bottom line, if you're thinking of renting this year, it's important to keep in mind the true costs that you'll face. And if you have any friends, family, or coworkers that are looking to renew a lease, give me a call. I've got a rent versus own analysis that I can send out. You might find it very interesting, very fascinating. That is the Real-Time Real Estate segment, again, brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. Continue our conversation. Jim Norton from Realty Pro 100 is with us right now. And, I know we were going to talk about new homes, but I'm the host, so we can change our mind anyway.
Are we going to rental?
What's that?
Are we going to rental?
No, I don't want to go to rental. What I want to talk about is psychology. And I know you've been going to a psychologist for many, many years. It was just right there.
Seeked out a lot of help.
But this time last year, we heard, early in the year before the interest rates started rising, we were in a market that was very, very much a seller's market.
Yes.
We had very low interest rates.
Yes.
We had prices escalating. We had multiple offers. And the biggest complaint I heard from the consumers and the listeners was, Ron, I'm making offers. I've made a dozen offers already. Everyone's been rejected.
Right.
And prices are going up, and I can't find anything to buy. Fast forward till the beginning of last month. because last couple of weeks we haven't heard this, but beginning of last month.
Okay.
Prices have stabilized. I think they're going to go down, so I'm going to wait. And I think interest rates are going to go down, so I'm going to wait. Do you hear those things?
Absolutely. It's amazing. What you wished for a year ago is available, has come true. You've got a better, more affordable price. You can have more options to buy something. There's not 3, 4, 5, 7 people deep. And you have the ability to negotiate far better. You're going to pay two points more in interest, which you can deal with. If you can deal with it, then you can wait till the point where you refi. And if interest rates go down in 2 years, it's all the better for you.
Right.
So it's giving you what you want, and yet you're hesitant about what you want to do.
I want to wait until it goes back to where it was.
I mean, I don't know what some people I think are searching for the perfect scenario, while other people's just jump off the dock right into the water. And it's very interesting. Now, on the other hand, I've got one listing going right now, and we've had some offers come in, and I blame this on, I'm not sure who to blame this on, but neither one of the offers held up because there was no financing ready to go. And when they basically went out like looking at houses without financing. And I mean, how many times we've gone over this? Get your financing lined up, know what you can buy, know what you can afford, where you're going, what's all going to be. And of course, what happens is they write an offer, but it falls apart because they either can't.
Now, did you even
qualify or
entertain the
they're,
offer?
Pardon?
As the list is representing the seller, when they don't have a financing in place, do you even entertain the offer?
Well, as a listing agent, when the offer comes in, you're expecting the backup, which would be the financial worthiness. And if it doesn't come within the 3 days, I mean, nothing ever, because the standard contract, it's I think it's 3 days. It might have changed to 5, but the contract just ends if you don't respond to it. You do not have to respond to an offer as a realtor in California. Your buyer doesn't have to, or your seller doesn't have to respond to an offer, and then at that point it just goes away. It ends. It has a time limitation on it. So, but the point being is no, you ask for, okay, offer's reasonable. Your seller says, you know what, that's not a bad number, or it's not what we expected, but we'll take it. And then you say, okay, well, let's make sure they're going to close. And then you start digging into that, and then it just falls apart completely.
That's when we got the problem.
I don't understand why that is. I mean, that's like real estate 101 is make sure your buyer is worthy.
Yeah, that's the challenge that comes with that, and you end up with
good music for that.
Yeah, it goes straight downhill.
Yeah.
So here's the issue: why does that happen? Well, it's because somebody's gone to a cut rate lender, or they haven't gone to a lender, or they've got an old pre-approval from when the interest rates were half of where they are today, or they lost their job, or they added up more credit card debt, so their ratios got out of whack.
You also have is they had an approval from a website.
Yeah.
Don't even have to pick one. There's 1,000 of them. But they had a pre-approval from the website, and that doesn't really mean anything. That's just sticking some numbers in and saying, "Oh, here's what you." Really, it basically says, "Here's what you can afford." It doesn't really say.
It's really more of an affordability calculator than a pre-approval.
Right, and then a pre-approval. You mentioned earlier the change. We have this year's changes in jumbos and conforming.
Right.
Did they look at that? Do they understand that? Do they have a mortgage person? Whether it's a bank or an independent, but somebody's got to be on the other end.
And I'm going to share again, as I always do, don't go to the big banks. Not because I'm against big banks. My son works for one of them, so I appreciate him, and I use one of them, and my family works for others. But here's the issue: if you walk into, say the Stagecoach, ask them what the flag is doing today. Right? And I don't want to use their names because I don't want them to get mad at me. But if you go to those two companies, they don't know what the others are doing or what they're offering. And I can't tell you how many times I've had somebody say to me, well, I'm not I can't do this because they declined me over at XYZ Bank.
Right.
And they forgot the extra 2 words that are very, very important. With us. Right? Because almost every lender institution that I know of has what's called overlays.
Mhm.
Right? I mean, they say that here's what the guidelines are, Fannie Mae or Freddie Mac, but we don't really want to get that aggressive because we don't want to have a problem on our portfolio. So we're not going to go quite to what the exact guidelines are. We're going to make it a little bit more stringent, which is absolutely okay, as long as they do it for everybody across the board and they're not selective. So they don't say you don't qualify with us. When you go to a mortgage bank or a mortgage broker, what's ending up happening there is they're a personal shopper. So they might find that a big bank on the corner doesn't like your file, but maybe an insurance company in another part of the country, that's exactly what they were looking for. Right? For a long time, one of the big banks, one of the biggest of the banks, didn't like self-employed borrowers.
Right. That's a
right?
huge. And then some people don't realize it seems like some people don't realize they are self-employed.
Right. What is the definition of self-employed?
Right, exactly. They think of self-employed as a plumber.
Right.
Is self-employed or something. It's like,
right,
no,
where you call him directly.
You can be self-employed. Of course, California, this has been a big,
well, you're
battle.
You work for a company, but you're self-employed.
Correct.
Right.
There's an interesting one. I mean,
we're going to talk more about this when we come back. You're listening to Ron Siegel Radio discussing your real estate, current events, and the financial markets. How to handle a medical debt collector. We'll talk about that as well. You can reach me anytime. Our off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Your Credit Matters segment today being brought to you by the area trusted, by creditsanitizer.com. You have a credit report, it's wrong. What are you doing about it? Credit Sanitizer has these solutions for you. You just need to make that call. Always love it when I get the wrong sponsor there, just to throw Josh a curveball, and then he throws it back at me. But at least we got Josh over there keeping me straight in the mornings here. How to handle a medical debt collector is our subject. Are you struggling with medical debt? Are you tired of medical collectors calling? If so, you're not alone. Studies show that Americans owe more than $88 million in medical debt. Reports also show that 20% of American households claim to have past due medical bills. Fortunately, the government has made changes in some of the rules regarding medical debt. Understanding your rights and how to deal with medical debt collectors can help reduce the number of unwanted calls you receive, no matter how big or small your medical debt is. It can impact your finances. Here are tips for how to deal with debt collectors for medical bills. When a medical collector contacts you, your first instinct may be to pay the debt. Don't make that mistake. These collection agencies handle hundreds of thousands of claims. Mistakes happen. There are also a lot of scam agencies that are not authorized to collect medical debt. You don't want to pay a debt that is not yours or pay the wrong agency. To prevent this from happening, do some research. Start by researching the collection agency. Make sure the agency can legally work in your state. Most states require debt collection agencies to obtain a license. Ask the medical debt collector for their information, including their name, name of the agency, street address, company phone, and license number. You can then contact your state agency to make sure this information is correct. It's also not a bad idea to contact the collection agency directly to make sure the medical collector out contacting you works for them. Secondly, ask the collector for information about the debt. Find out the exact name on the debt, healthcare provider, and date of services. This may help you decide if that debt is yours or not. You don't want to ignore medical debt. If the debt belongs to you, medical collectors can continue to call you. If it's not yours, you have only 30 days to file a dispute. Request verification of debt. If you don't believe the medical debt belongs to you, take the next step by filing a dispute. On the other hand, if you believe the debt is yours, take one more step to make sure. Ask the medical collector to send you an itemized list that includes coding. By law, you have a right to this information. I'm not a lawyer, just telling you some information that I believe to be true. It is. If the medical collector can't provide this information, try contacting the healthcare provider directly. Once you receive this report, check the names, dates, services listed to make sure everything is correct. You can also contact your insurance provider to request a claims history report. This data can show if the insurance company paid for these services. Also, keep in mind, most states, minors are not able to enter into a legal contract. This means that in many cases, they're not responsible for medical debt accrued if they were a minor. If you were a minor at the time of the debt, file a dispute. You have the right to file a dispute if you think the medical debt is incorrect or doesn't belong to you, but you must act fast. The law only gives you 30 days to file a dispute from the first contact. In your dispute, explain why you think the debt is not yours. Note any mistakes you found and provide any documentation. Once complete, make a copy of your letter and any backup information first before sending your letter by certified mail. Once the collection agency receives your letter, they must stop contacting you and must investigate your response. They also must notify you in writing of the results of the investigation. If the agency cannot verify the debt, they must stop the collection process. If, on the other hand, they find the debt does belong to you, they can continue. Medical debt can impact your credit score. To determine this impact, get a copy of your credit report. Cleanall3.com. You can get one free copy of your credit report each year from the top 3 credit bureaus. I suggest just monitoring your credit. Once you receive your credit reports, make sure the information listed is correct. You also want to make sure the credit reporting agency lists the debt as medical debt. This factor is very important because agencies reporting must handle medical debt differently. Number one, paid in full medical debts are removed from your credit report. Credit reporting agencies will wait before listing medical debt. Credit reporting agencies will only list large medical debts. All this is great information. That's why you need to get that credit report audit free. CreditSanitizer.com. Despite these changes, unfortunately, medical debt can still impact your credit. Even a slightly lower score can affect your ability to obtain a credit card, get a personal loan, or purchase a home. If you find any errors on your credit report, including a medical debt that isn't correctly listed as medical debt, file a dispute with the credit reporting agency. You can send the credit reporting agency a letter that explains the error and why you think it's wrong. You can also, if it's your debt, talk to the medical collector about negotiating. Yes, you can negotiate that as well. And if it's an old medical debt, make sure you take a look at it closely to see how it's being reported, because by paying it, you could be shooting yourself right in the foot, and we don't want to see that happen. That is the Your Credit Matters segment brought to you by CreditSanitizer.com. You have a credit report and it's wrong. What are you doing about it? Continuing our conversation, we're chatting with Jim Norton this morning. We've been all over the board, and it's fun when Jim comes in because we don't plan the broadcast. Some of you may say, yeah, we can tell. Because we just want to chat with you and give you some great information, the best information that we can about what's going on in the marketplace today. So we've talked about renting, probably not a good idea. We have the rent versus own opportunities. We've talked about, a fixed rate loan. It's kind of funny how fixed rate loans, you said this during the break, Jim. So you get a 30-year fixed rate loan, and it really is not, it's kind of a misleading term, fixed rate. It is fixed for 30 years unless you decide you want to lower it,
right?
Because you can always refinance it.
Yeah, people get confused. Well, there's so much information today.
And some of it's even accurate.
Compared to, yeah, some of it's even accurate. But I mean, think about it. Compared to when we started in the business, you chatted with people, if you're smart, you shopped around. Today, you're bombarded with information. Do this, quick loan, quick this, quick that. Everything's made to be simple and quick. But yet, really, when you get into it, you still have to fill out.
When you get into it, it's not simple and quick.
20 pages of application and provide all your tax returns and everything else. There's nothing quick about it. But it's
so something, while you're on that subject, Jim, I want to give two different websites, totally free, both of them. Do not call.gov. Do not call.gov. So if you don't want to get unsolicited messages, do not call.gov. And if you're tired of getting all that junk mail from every credit card company and their uncle and every lender, the optoutprescreen.com, optoutprescreen.com. Two websites you can go to, register totally free, and it'll save you a little bit of grief.
I'm not sure if do not call is that effective, though. My calls haven't slowed down, but then again, I have a public number, so I always look at it that way. Mine's when you're a realtor, your phone number, it's public.
It's all over the board.
It's out
there. I think I saw it. Well, I'm not going to.
Yeah, it was on a billboard over there, spray painted on the side of a sign. Yeah,
exactly.
But circling back, and we always get to this subject, and it's one of my favorite, and it's one of yours, I know, is planning. Planning. It's 2023. It's the first month of the year. Have you sat down and thought about what are your plans for 2023? I mean, you have dreams, of course, and maybe you're an older couple and you're saying, look, honey, we got to start thinking about downsizing. Is this a good time to downsize? Right sizing, however you want to call it. Is this a good time to do it? It's going to be a good year to do it. But who are you talking with? Are you talking with your realtor? Are you talking with your mortgage banker? Are you talking with your accountant, your lawyer, whatever you need to do, depending on your situation. If you have a lot of companies and a lot of businesses, self-employed, you've got a lot more people to talk to. If you're employed, you still need to talk to a lot of people. And what is going to be your plan? But even if you're older, I mean, remember, a majority of houses here in California, a lot of them are 2-story. And so maybe it's time to start thinking about getting a 1-story. And with the prices coming down, this might be a good opportunity to get that 1-story and stay in Orange County. You don't have to move out to Sun City, Arizona, or something far away. If the kids are, let's say,
maybe you want to, though.
And maybe you do. That's the point, though. If you plan, it'll be what you want to do, not what you're forced to do. And that's why I'm a big advocate of planning. Just don't get into paralysis by analysis. Just
sure.
But have a
I was
plan
on a call yesterday, and this is a great one, especially for Southern California. And I know Josh is giving me the wrap up here, but think about this: in Southern California, if you've got a property and you own it free and clear, and you're over 62 years of age, think about this concept. You want to have a much more liquid life and a good plan here. Is think about a reverse mortgage, right? Take some of that equity out.
Look into it.
And maybe you want to buy a rental property, or maybe you want to buy a property out in the Coachella Valley or a beach house or something like that. Number one, it's good for your estate because now you've got 2 properties that are growing in value. And, depending upon on the situation, you may end up having a positive cash flow on the acquisition property. And, something, so now you've got more money and your estate's growing faster.
At 62.
At 62.
Right. I mean, that's interesting. We talk a lot. Like,
and you got 30 years left probably of life.
You're a young couple just starting out. You want to save, you want to do this. That applies to an older couple getting set to retire. What is your dream? How are you going to implement that retirement? I mean, it's so many people talk about wanting to retire. And again, coming from you and I, we're getting a little older, so we hear this more. But at the same time, what is your program? What is your plan? And how are you going to implement that plan?
And if you want help with that, give me a call, 800-306-1990. Jim and I are more than happy to help you put together a plan, your plan for your goals. Our goals are irrelevant at that point, right? It's all about you. And as always, I ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean, who are engineering us today. And of course, A special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.